Hi, everyone. Welcome. Folks are dropping in and joining us. And some of you who are already here, the conversation's already been started on our end. But good afternoon. Thank you so much for joining our webinar on Insights, how to develop a sector-wide benefits plan that advances decent work. As some of you may know, my name is Pamela Upal Sandhu. I am the Director of Policy, as well as the Interim Co-Executive Director at ONN. If you're new to ONN, welcome. We are the provincial network for Ontario's 58,000 nonprofits and charities focused on policy, advocacy, and services to strengthen Ontario's nonprofit sector as a key pillar of our society and economy. If you are already a member of ONN, welcome back, and thank you so much for your support. Our public policy research and advocacy work would not be possible without you all. Couple of logistical pieces. So if you experienced any tech difficulties during the webinar, you can type the issue into the chat box and our team will respond as soon as possible. We encourage you to ask as many questions as you want through the Q&A box. We'll have some time at the end to go through it together. You're also welcome to share comments and learnings on social media and just, send us an email afterwards if something pops up for you. To answer our most common question, you will receive an email with the recording and resources in 1 week. So to ground our webinar today, I want to begin with acknowledging that we are meeting on unceded and unsurrendered land that has been inhabited by Indigenous peoples from time immemorial. The ONN office from which I am calling in today from is located on the traditional territory of the Wendat, the Haudenosaunee, and the Mississaugas of the Credit. This territory is part of the Dish with One Spoon Treaty and is also covered by the Upper Canada Treaties. At ONN, we believe that as nonprofits, we must take seriously our role in responding to the Truth and Reconciliation Commission's 94 calls to action. So with that, I want to introduce our panelists today. So I'm joined by Liz Sutherland and Jason White. Liz is our former Director of Policy at ONN, who led our pensions work while she was here. She is currently the Associate VP of Housing Services at YMCA Ottawa. Jason is the Senior Public Advisor at OpTrust, who is super key in ensuring nonprofits know about the pension plan offering. Thank you both so much for joining this conversation. Excited to chat.
Thrilled to be here. Thank you for having us.
Yay.
Thanks, Ellen. Appreciate it.
So before we get started in our dialogue, and we have some really good questions that we want to go over, I wanted to give a little bit of context as to why we're having this webinar. First off, of course, it's part of our decent work movement building, advancing decent work in the sector. One of the aha moments that we've had over the last couple of months is that there's been so much turnaround and turnover in our sector that maybe not everybody knows about the pension plan, right? We've all talked about the labor force crisis. We've all talked about, people leaving the sector in droves or coming into the sector and changing jobs, etc. And believe it or not, we launched this pension plan 2017, 2018. So it's been a really long time. And so much has changed. So many people have moved on. So we really wanted to take this opportunity to share the information again around what is this pension plan? Why is it so important? How is it advancing decent work? And really making connections to the people in our sector. We know they're super vital in providing all the services and supports and programs in our communities. And without them, we wouldn't be able to do any of that, which is possible. And so this is one way for us to sort of continue that conversation. We also know pensions are not a commonly offered form of benefit in our sector, particularly a defined benefit pension plan, which is what we'll sort of be talking about today. And we wanted to do some pension education around that. Why is it important to have a defined benefit pension plan? How is it different than an RRSP contribution, et cetera? So that aside, the newer questions that we've been getting over the last year or so, I would say, is around, well, what is a pooled plan? What is a sector-driven plan? How do you get off the ground? How did you meet OpTrust? How did you facilitate this relationship? What was all of this about? And so that is one of the other conversations we want to have today to really share, how did ONN start on this journey? Why did we start on this journey? And Liz was sort of, the person who led all of that at ONN when she was here. And how did we develop that relationship with OpTrust? Why that plan? And from OpTrust, Jason's perspective, how did that partnership coalesce? How did we build it? And kind of what's been the impact of that and where are we today? So that's just a bit of context. And I guess the last piece I want to share is just broadly thinking about labor force. So, as many of you know, since inception, we've continuously worked towards a strong and resilient nonprofit workforce where workers, employers, and communities are supported equally rather than at the expense of each other. So, that's what all our decent work movement building has been all about. Our sector's labor force, as I shared, is not only made up of the communities we are rooted in, but it's also critical for serving the communities from senior leaders and frontline workers to operational and program roles. So the theory of change being if we can recruit and retain skilled people, and pensions being really, really key part of that recruitment and retention piece, we as a sector will be better positioned to fulfill our community-based missions. We know we need top line benefits in the sector. We're in a very tough labor market, situation right now. And aside from that, whenever we talk about the labor force crisis, the number one thing we get told is, well, you're not the only sector who's facing this, right? And so it's up to us to sort of take ownership of our labor market, our labor force, and do as much as we can to support people. So that's kind of the impetus for this conversation. And I see a bunch of people online. So yes, please share stuff in the chat. And we'll sort of get started. So I want to start by talking about the idea of sector-driven pension plan and how it emerged and came to fruition. So my first question is for Liz. What was the catalyst for the pension plan? How did you map out this journey? And can you share like what pooled benefits are? Because I know that's sort of insider language that we've been using, and all the things, how did we get this plan off the ground?
Yes, thank you, Pam. That's a great place to start. Yes, I'm here in my capacity as a former ONNer, and speaking as an individual. So I'm happy to speak to the journey. I guess I could say there were three parts to the catalyst for this. The first one was around ONN's Decent Work project. So the phase one report identified a number of things that needed to be addressed to build a decent work movement in the nonprofit sector. And a key part of that was around having health benefits and a kind of pension plan for the sector, because we are a female-dominated, a women-dominated sector, and we know that women tend to earn less over time on average. They tend to take more time out of their careers for family responsibilities, and they tend to live longer on average. And so there was kind of a triple whammy that faced our women-dominated sector. That many people were working in the sector, contributing to their communities, and then retiring into poverty, which is not a decent work story. So we knew that pensions were part of the decent work movement plan. So there was that piece. The second part of the catalyst was the provincial discussions that were happening around the time for an Ontario retirement pension plan as a way to get the federal government to act on expanding the Canada Pension Plan. So the Ontario government had introduced this idea of an ORPP. And so we were looking at what would that mean for the sector? Did we need something else on top of that, or would it solve our pension problem? And so that was the second piece. And then the third one was around the inspiration we had from Quebec. So we invited Michel Lisée, who was kind of the grandfather of the Quebec nonprofit sector pension plan, to our conference in 2015. The plan's called the Régime de retraite des groupes communautaires et de femmes. And that was launched in 2008 after a 4-year development process. So we had the inspiration, we had a catalyst in terms of a public policy change, and we had a kind of call to action from our first phase report on the Decent Work report that we knew we had to act on. And so I guess just briefly, I'll say that the journey had a couple of chapters. We had 2 task forces, one after the other. And we knew it was important to gather a task force because we knew we needed expertise on this area. We also needed expertise on this sector, what was going to work for employers, employees, what were the needs and priorities of the sector. And so we brought together this task force to start building that knowledge base. We talked to the sector a lot about what could they afford to contribute, what was going to be adequate, how should we balance the risks and rewards. And so the first task force did a lot of research and consultations and came back with these kind of broad stroke recommendations for what a plan should look like. And then I'm going back because it is a few years ago, but the second part of the journey was kind of to get the band back together after we knew what we wanted, broad strokes. to essentially assess the lay of the land at that time, because the ORPP had been abandoned in favor of a CPP expansion. But the second task force realized that that probably wasn't going to be enough, so there was still a need for a sector plan. And also there were some regulatory changes on the table that we had to consider. So the long and the short of it was the second plan met with a lot of existing pension plan trusts, I guess you would say, and essentially looked at all the options and matched them against the recommendations they had, and endorsed OpTrust Select, which was in its ideational stage at the time, as the plan that most closely matched the recommendations. And then that partnership, as it were, or that endorsement from ONN came to be because of the recommendations of the second task force. And so I'll leave it to Jason to talk a bit more about how the plan got off the ground, but that was kind of how it came to its fruition in terms of recommendation as a sector-driven pension plan from the ONN side.
Awesome. I was here when those conversations were happening. I joined ONN around 2017, but I didn't know like such, so much depth in terms of the context and the historical knowledge. So that's really helpful. Just quickly before we jump to Jason, a question that occurred to me was, I recall there was a moment where we were like, well, we'll build our own plan or we'll figure out our own, right? So when did we shift from like, what was that conversation like to be like, oh no, we can't do that?
Right. Yes. It was a big question. And
Yeah.
looking at the Quebec sector plan, that's what they had done. Essentially, their rationale was sound in that they knew that it would create a pool of assets that had to be reinvested or invested rather, and that they wanted that to be sector driven as well.
Oh.
They had a lot of infrastructure that the Ontario sector doesn't have. They
Mm.
have these large, social finance funds. They have these, giant credit unions that they have to rely on, and it's kind of a different landscape in terms of the financial infrastructure.
Yeah.
And so that was one of the reasons that the task force didn't end up kind of doing a build your own. But the other piece was a regulatory change that would have been required, and that was around target benefit pension plans. And we'll get into that in a little bit. But
Yeah.
I think the idea was if we were going to build a plan of our own, it would have been something that the regulatory environment at the time wouldn't have permitted in non-union contexts. Now that has since changed, but it wasn't an option at the time. So those were kind of two considerations that the task force took into account, because they did seriously consider whether to build up from the ground for sure.
Yeah. Oh, thanks so much. That's super helpful to know. And so building off of that, all of those insights, Jason, I'm wondering from your perspective and OpTrust perspective, what was the journey of ONN's endorsement like? As I think Liz was sharing, it was sort of ideation, starting up,
Yeah.
and really like what are some key success factors for our partnership to come about?
Thank you, Pam. That's a great question. I'm mostly going to be building off of the things that Liz said. I actually joined OpTrust when we were just starting that process of working with the ONN on developing a plan that would be in partnership with the ONN. So I worked with Liz quite a bit at that point and continued to during her time at the ONN. So it was actually quite a bit of convenient timing. When the ONN began their process of looking at a pension plan for the sector, we were already looking at an option to expand access to the defined benefit pensions we provided to a broader group of people. For some historical context for everyone that's listening right now, we've been a pension provider for the Ontario Public Service for about 3 decades. And we were restricted to just serving that group of population, just Ontario public servants. And we really, believe in the defined benefit model as the not only the best and most secure form of retirement savings for individuals, but also the most efficient. And when you believe in something, ultimately you should be trying to spread it further. So we were looking at how we could expand access, and it just worked out timing wise that the ONN was looking into options for the sector, and we thought there's quite a bit of overlap in the people we serve and the people that are working within the nonprofit sector. And ideally we can expand there. And then what works out really well is that because we were existing pension plan, we already have all of these scales, the scale of assets. We were administering assets on behalf of over 100,000 people already at that point. We've got the technology in place, the expertise about managing a pension plan. So we are really able to serve that broader group of people without having to completely change what it is that we offer. And so we found alignment with the sector almost immediately, alignment with what we offered and alignment with the needs of the sector as well. And so we worked really closely with the ONN, but we also worked with nonprofit organizations directly. We did quite a bit of research, speaking with nonprofit workers, asking, what are the challenges that you're facing for organizations? What are the barriers that have prevented you from offering a more secure retirement to your employees? And learned about those challenges, and then subsequently we're able to adapt those things into the design of the plan. But by far, I'd say the most important factor in terms of establishing this partnership with the ONN is the fact that we are a pension trust, which effectively makes us a nonprofit ourselves. We don't have that private profit function that you'd think of when you think of like a bank or an insurance company or a big institutional investor. We are a pension trust. Every dollar that we have under management is our members' dollars, and our job is to invest them and to invest them in efficiently as possible with the purpose of providing a secure retirement for their members. So it meant that the work that we do, is aligned with the interests of the sector. We're not, paying out dividends to shareholders. We're paying out pensions to members.
I love that. Thanks so much for underscoring that, because that's kind of the message that we try to get across, like what does sector driven mean? And it's the mission alignment, the values alignment that really I think probably spoke to Liz in the task force, of course, and also can predict the longevity of the partnership and the success of the partnership, right?
Absolutely. Yeah. It's just, lovely for us. So when we're going out to meet with organizations, if they're meeting with insurance companies that, operate something for retirement, they're meeting with a salesperson. We don't have salespeople because we have nothing to sell. We're just there to, explain what it is that we're offering and how it works.
Awesome. Awesome. Thanks for sharing that. Okay. So we've talked a little bit about defined benefit, but I'm going to sort of hone into that a little bit. So there's so many pension plan options available, right? I know in our survey of the sector before now, there's RSP contributions, matching contribution, defined benefit pension plans with higher contribution rates, all of those pieces. However, when we talk about OpTrust Select, we emphasize how it's like sector driven and all of those pieces that we've talked about. So I'll start with Liz again. Adding to the conversation around sector driven, what did that really mean and entail when you were, in the inception phase, I guess, of this process? What were some key considerations you were thinking of from your perspective, ONN perspective? And what does, like, how do you make something like this reflective and responsive of the sector's needs? And I guess it's a long question. So what I'm really trying to say is, like, what made you want to endorse this plan versus, all the options that were out there?
Yes. Yeah, I'll do my best to unpack that. I think for the first piece, sector driven meant that, we went out and talked to the sector. We talked to employers and employees about their views on retirement income security. We did surveys, as I say, about, what can you afford to contribute? What are you expecting to have in retirement? How can you change jobs? Like all those considerations. We did focus groups on things like risk. How much risk were organizations willing to take on? And then finally, we did a lot of key informant interviews. We did conference sessions to kind of popularize the idea and to gather input. And of course, the task force itself had robust discussions about plan features and designs, and how best to balance the interests and needs of employers and workers in terms of their contributions and the risks they took on. So, I mean, one of the key recommendations was that it should be sector-wide because we can benefit from the economy of scale that Jason referred to. And individual organizations would not then have to shoulder the risks by themselves. The general concept of a pooled plan is that we're all in it together. And that means you do share risks across a broader range of individuals and organizations. But what it does mean in the context of a defined benefit pension plan is that it provides a predictable retirement income for workers until their death. Right? If you have an individual savings account like an RRSP, the worry is always that it's going to run out too soon. And so that's the contrast between that and a defined benefit plan. You know that as individuals, you're told to plan to live to be 90 so that you can know that you're fairly safe, because most people will die before then. Well, the average age that people live to is lower than that, right? It's in the early 80s. And so a pension plan in pooling risks can say, and the actuaries do this, right? They say, we know people are going to live this long on average, and so we can make our investments accordance with those actual averages instead of everyone having to manage their own risk. But what they can also do is to invest over the longer term, because you've got lifetime after lifetime after lifetime. And so you're not just, your planning horizon is longer. And so you can manage that risk over generations, essentially. So there are a lot of reasons why having that kind of pooled plan makes sense from an efficiency point of view, as well as an adequacy and a kind of security point of view from the individual's perspective. So those were some of the things we talked about as the pensions task force. And after crunching a lot of numbers and looking at a lot of existing plan designs, and we looked at different provinces as well and what they had to offer, the task force landed on this proposal that employers and employees should contribute somewhere between 3 and 5% each of their earnings. And that with that contribution range in a defined benefit plan, we could get workers to an adequate and dignified retirement income when combined with the public plans they have access to, like Canada Pension Plan and the Old Age Security OAS plan. So I guess there's some of the considerations that were highlighted by the task force as being important to the sector, and a way of balancing what we heard from employers and employees and the available range of pension plan options and design features.
Thank you. That's yeah, that's a really nice way to describe like why this plan, right? And why this process. Which sometimes we can't all share all the time. So that's super helpful. And so Jason, turning it to you, do you want to walk us through the plan? Like what is the plan? And what are we offering, all of those pieces? And I know we've started talking defined benefit pension plan. If you want to add anything to that, that'd be really helpful.
Absolutely, yeah. And I will start with a bit of an overview of what defined benefit is, just because in our sector, we love our acronyms, we love our jargon. So, apologize in advance for that. So defined benefit, what it is, it's really the gold standard of retirement security offerings. And the reason it's seen that way, and I know, that's coming from somebody that works for a defined benefit pension plan, but you don't have to, have too many conversations with your friends and neighbors for people to say, it's the best option to be in. And the reason it's considered that is because of the predictability that comes along with it. The easiest way I can sort of articulate what a defined benefit is versus, say, a group RRSP, which would be sort of the most common other option. Defined benefit pension plan is like continuing to receive a salary in retirement compared to living off of savings like you would with a group RRSP. So the way it works, and I'll talk specifically about OpTrust Select, is as a member of the plan, you contribute 3% of your pay off of each paycheck, and that's matched dollar for dollar by your employer, so that you're in this with your employer the whole way along. And then we invest that money on your behalf. And again, remembering we're a pension trust, which means we're not charging fees for our membership. We don't have a profit motive that is skimming off the top. Our sole purpose is to invest on your behalf and ensure that you're receiving that predictable retirement when you get there. And then, as Liz outlined, you also gain the advantages of investing collectively with a little over your 100,000 closest friends. You gain the advantages of that we're able to invest in some things that you can't really as an individual, and that we're investing with a much longer time horizon. If you're in a mutual fund through a bank, your advisor is probably getting their bonus incentivized off of the quarterly returns. Trouble is, that doesn't really have anything to do with your retirement. That has to do with what they're chasing 3 months down the line. We're usually thinking more in a period of decades and generations, because our sole function is to think that sort of long term, and our membership benefits from that in the end. So you contribute throughout your career, your employer matches it, we manage your contributions, and then when you retire, what you receive is a predictable monthly benefit for life, regardless of how long you live. I know, generally speaking, that the dream for most people is that idea of living to be 100. It's actually the fastest growing demographic, age demographic in Canada is centenarians, people over the age of 100. So while we all plan for 90 as a prudent approach, what happens if you do have that great fortune of living 10 more years? It's thought to be, the dream, the greatest thing that you could hope for. But that starts to become pretty scary if you start seeing the balance of your bank account declining year after year after year. With the defined benefit pension, you don't have that concern because you're just going to continue to reap the benefits of your contributions regardless of how long you live. And notably, the last thing I'll sort of highlight about the plan is that cost of living upgrades are built into the design of the plan as well. So that, if you do live to be 100 years old, you're going to see your benefit growing each year with the cost of living so that you're able to afford the same things, that your standard of living is maintained. And you don't have to worry about the impacts of inflation, which I know we're all feeling and talking about right now. So those are some of the sort of primary design features of the plan. And yeah, those are the benefits of the defined benefit model.
Awesome. Thanks for sharing that. And again, I think the alignment piece is so important because those are the same features that Liz had stressed, or those were the things that we were looking for when we were looking to endorse someone, and knowing that that's sort of, built right into the plan. A question just came up for me, so I'm going to pose it and then we can, I'll give you some time to think about it too. One, it was around challenges, because I think, the plan's great. We had such a great partnership, the process, all of that, but I'm sure there must have been some road bumps, right? So both of you, can you think of any challenges or road bumps or things you're like, oh yeah, we had a moment of pause here? And while you're thinking of that, I can share with the audience who's here, ONN was the first adopter of the OpTrust Select plan. As soon as we endorsed it, our team came on board. And at that time we were small, Liz, I think we were like 7, 8
Yeah,
people.
it's about that. Yeah, maybe
Yeah,
8.
we've grown to 12, and we offer it to, permanent, part-time, contract staff as well. And it's become a key feature of us, like recruiting and retaining people. And there was a buyback piece too. I remember that you could, because our ED at that time was also, had been in the sector for a long time and with ONN for a long time. And there was an option to buy back your service as well, and have that for retirement. So yeah, just as a FYI for folks that are on the line. But yeah, both of you, either of you can think of a challenge or something you want to highlight.
I think I'll just jump in, and when you're mentioning buybacks, I should probably highlight that a little bit further as well. And then we can get back to the question. So apologies.
No worries.
This is something I should have mentioned in the design features of the plan. So this is specifically something that we built into the plan based on conversations we were having with the sector back in 2018. And basically, it's the ability when an organization joins the plan to buy back service in the plan based on how long they've been with their current employer. So it means if you've been with your current employer for 5 years, 10 years, 15 years, you can purchase service in the plan as if you've been contributing to a pension the whole way along. So if you're further along in your career, closer to retirement, we heard the concern from the sector that they were worried that, is this too late? Is it too late for me to get a pension and be able to have secure retirement? The ability to buy back that past service means that all of a sudden employees can convert their personal savings, private savings. If you have money in an RSP, you can transfer it into the plan at a tax-free basis. And subsequently, people are able to generate a pension as if they'd been a member of a plan their entire career. So just wanted to jump in on that. And then
Thank you.
Liz, you
Yeah.
can go first if you'd like to talk about challenges. Yeah.
Sure. Yes. Yes. It's awful once you get us started talking about pension plan features. We're like, oh, and don't forget about this. So mine for that was about admin costs, because we hadn't even touched on the fact that the admin costs for a defined benefit plan are so much lower, and that was one of the key features that our task forces looked at. Because it's kind of an invisible feature. Like, a lot of people don't think about what the cost of their pension or their RRSP is, but there are administrative costs, and they're so much more efficient in larger scale defined benefit plans. So for employers in particular, I think that's a feature that we shouldn't neglect to mention. But I won't go down into the weeds about further design teachers. But I did want to also land on, yeah, in terms of challenges, I would say for us, for the task force, it was the policy and regulatory environment, because it was in flux at the time, with the Ontario Retirement Pension Plan move forward, if not, would the CPP be enhanced? What would that look like? How could we model what was adequate for retired workers in the context of this changing policy landscape? And then the other feature around that was for target benefit pensions, which was something that our task force looked at very seriously as a way to mitigate risk around longevity risk and investment risk and that kind of thing. And because it wasn't available to us, we were looking into, well, is that going to change, and what would that look like? And so the policy framework, the policy environment, was certainly an uncertainty that we had to deal with as a challenge for the two task forces. So I guess those would be the ones that I would highlight, especially ONN having a focus on the policy environment. That's always something that we had to take into account. Yeah, and other than that, I guess it was just the question of, if you build it, will they come, right? So it felt like a big thing to take on, and we were doing our best to channel the desires and priorities of the sector into whatever was going to come out of it. And then it was, well, is it going to have legs? And as Jason can show, it has had legs, and it's grown, and people have come on board. And I think that's been important because of the mobility that creates within the nonprofit sector. We had always this problem of losing nonprofit workers to the public sector, often because they have these robust pension plans. And so it gives us this additional tool, not just to retain workers at individual organizations, but to retain workers in the sector, because we had this sector-driven, sector-wide pension plan. So yeah, so I guess I would highlight that as the regulatory framework as being a key piece that the task force has had to deal with along the way.
I'm glad you highlighted the "if we build it, will they come" piece, because I don't think people may know, but Liz probably remembers we're trying to do the same thing with a top-up benefit for maternal, parental adoption, surrogacy leave. Our sector doesn't have that benefit, so we're trying to see if we can pool risk and resources same way, and offer a top-up for anyone who's part of that plan. And the number one sort of like the whole business model, and I'm not an expert, the actuary model, like the financial model, all sits on how many people are going to join the plan at what point to make it sustainable, right? And so that's I think one of the other hesitancies, like even as we're trying to figure the top-up benefit fund out, is yeah, people want it, yes, it's important, but at the end of the day, will they join the plan? Because the whole at times the whole success sort of is on that, right?
Mm-hmm. Exactly.
And Liz, you stole most of my answer. So I was going to say regulatory challenges as well, but I will still speak a little bit about it from
Sure.
the perspective of the pension sector. So the pension sector in Ontario is, if not the most regulated, likely the second most regulated sector in Ontario. I think energy technically is a little more heavily regulated, which is probably a good thing as well. And the reason is because the work we do is a singular purpose, ensuring that our members receive a predictable, secure retirement, and it's a really important part of the economy. So we are very heavily regulated, all for good reason, which means that we are also very slow moving, and also for good reason, right? The changes are made in a very meticulous, cautious way. So being able to serve a larger group of people than the Ontario public servants that we originally served was required work from the government to expand access for us and approvals. That was it was a long and tedious conversation, but ultimately we got to the right place in the end, and we're able to bring in nonprofit workers too.
Sorry, I'm showing my face because we have lots of questions from folks who are online. So maybe we can start getting to those so that we can actually get through them. So the first question, it's a two-parter. So if our existing employer, based on years of service, is matching at 5%, is there flexibility to increase? And then the second part was, with buyback, is there a maximum of years? I guess this is a Jason question.
Yeah,
Sorry.
I'll jump in on this one here. Yeah, so they're both really great questions. And I'll start with the contribution rate one, because that also kind of speaks to the challenges and the slow-moving nature of our sector. So OpTrust Select is specifically set at 3% contributions per side, and that is the only option that's available. The reason for that is because we are fiduciary to our members. Our obligation, first and foremost, is to ensure that we are operating the plan and administering and investing and stewarding their money as efficiently as possible. And administering additional benefit rates is expensive. So we've only offered that. We are in the long term hoping to be able to expand to a additional contribution rate so that we can, say offer a 5% contribution rate in the future. But we're looking at that through technology upgrades that would make that an efficient offering that wouldn't add any cost to the plan. So not available yet, but it's something that we're considering for the long term. And what we have had employers doing in the meantime is many have joined that currently offer an RSP, and they begin offering a 3% contribution to OpTrust Select and then a 2% contribution to an RSP on the side. So you are able to do both. And that way you can have that predictable, secure monthly benefit that comes along with a defined benefit pension like OpTrust Select, while still maintaining that contribution rate to your members, to your employees.
Oh, that's interesting. I didn't know. I guess we get to learn today too, as ONNers.
I think I missed the second half of that question, actually, Kavita. The first half was
With
contribution rates.
buyback, is there a maximum of years? Yeah.
And the only limit the years you can buy back, again, based on the fact that we are very regulated, it's if you've been with your current employer since, I'll get the year wrong, but it's the early 70s, so it doesn't apply to most people. So if you've been with your current employer since the 60s, then there's going to be a slight cap on the years you can purchase back. But broadly speaking, if you've been with your employer for 40 years, you have the ability to buy back that amount. And I saw one of the other questions that popped up. The cost of the buyback is to the member only. The employer has no involvement in that. So it's up to the member if they want to buy back past service. It's up to them how much they buy. They can buy back all, some, or none of what they're entitled to. It's completely up to the individual. But the cost is just to the individual, not to the employer.
So the employer doesn't have to contribute to buy back.
Exactly. Yeah.
Okay. What happens, this has come up a few times, what happens if an employer changes jobs and their next employer does not belong to OpTrust Select? Can they cash out what they have invested to date?
Another great question. So there's a couple options. The first one would be if they're moving to another employer that offers OpTrust Select, then it's just sort of a seamless transition. They continue contributing to the plan, continue growing their benefit within the plan as if they never stopped, which is one of the major benefits of having that sector-wide plan, is that we're expanding constantly and hoping to grow and be able to serve bigger and bigger chunks of the sector so that people have that flexibility. But if you're leaving the plan and going to an employer that doesn't offer OpTrust Select, then you basically have two options. You can leave your money in the plan and take a pension when you retire based on the amount that you've already contributed. So, it likely wouldn't form your entire retirement. It would just be another piece that would go along with CPP, OAS, and OpTrust Select. And then, you might continue having private savings elsewhere. So you'd still get that predictable monthly amount, but just based on the years that you are in the plan. Or you can take what is called a commuted value out of the plan. So that's sort of a lump sum based on the value of pension you've accumulated during your time in the plan. And then that goes into a locked in RSP that you would be able to access when you reach the retirement age.
Okay, great. Curious about the experience of forming the task force. Was there any resistance? And kind of related to this is another person asking, how did you recruit for your task force and what qualifications did you ask for? They're looking to create a similar structure for their network, but don't personally have this level of expertise. So what was our sort of process like?
No, that's a great question. So we did not have in-house expertise. I was tagged, you're it, as the new policy person. I only joined ONN in 2015. And so essentially, we relied on our network to find people who felt comfortable exploring this with us. So we were a set of lay people for the most part. I mean, I had done a little bit of work for what's now known as Employment and Social Development Canada, to learn about pension plans in general, but I was by no means an expert. And the two co-chairs we recruited for the first one, I would say, is where a lot of our expertise came from a pension background. So Howard Green, one of our beloved policy committee members, co-chaired the first task force alongside Michael Kaner, who was actually a retired pensions expert, retired lawyer. And so, he, in many ways, Michael is kind of the godfather of the pensions task force work. And so with Howard and Michael, and then sector experts, because we insisted that this was not just about being a pension expert, but you need to know what the sector needs and would prioritize. And so we brought people together who were, for the most part, lay people, but we had a couple of volunteers who lent their expertise to the task force as well. So that was kind of how the first task force came together. Now, of course, a lot of people turned us down because they said, "Oh, that's not my area. Oh, I don't know enough." But the people who did step forward, it was a learning exercise for all of us. And we did learn from what was already out there. We relied heavily on Michelle Lisée, our champion from the Quebec sector, and others in the field. I remember getting good advice from Peter Elson, who had done some work on pensions in the nonprofit sector at the time. And so we did call on people, and of course the people at the plans were very helpful. OpTrust, absolutely, we got to know very well, and also a couple of others from a few other plans that were around. They were all happy to help because they recognized the value of the project. So we benefited from a lot of expertise for sure. Yeah, did I answer the first part of that question?
Yeah,
I mean, yeah.
Was there any resistance? Was the
resistance,
other part?
right?
Yeah.
Yes. We didn't encounter resistance to the exploration, certainly. There was resistance in terms of what we were recommending. And I would say some of the interesting pieces were around, I like my RRSP because I can use it as an emergency fund and I don't want it locked in. And I get that. And there were a lot of people who felt that. But what I think people realize looking back is that if you use your retirement savings as an emergency fund, it's not going to be there for what it was made for. And the same is true if you use it for the home buyers plan or whatever else, right? If it's for your retirement, it should be for your retirement. And if it is locked in, you're actually better off, and you'll bless that arrangement instead of cursing it when you turn 65. And I think there have been studies that show that with things like RRSPs, the average savings in them were something ridiculous when people retire. It's like $1,500 or $10,000, like certainly not enough to live on, because people do treat them like bank accounts, and then you end up with an inadequate retirement savings. So what people cursed in the way of recommendations at the time, I think they will bless when it comes to their retirement.
And just building on that, Liz, I couldn't agree more. People often think that their home is going to be the most expensive thing they purchase, but we tend to say retirement's actually probably going to be the thing that costs you more in the end. Retirement's expensive, but it is a lot cheaper when you start younger. So there's always reasons to kick it down the road. We're a little paternalistic in that sense that we're forcing you to make those monthly contributions from the start of your career. But it's going to save you an immense amount in the long term, and save you quite a bit of stress when you get towards those retirement years.
Jason, I think this is a question for you now. So what is the pooled fund invested in? Are there strong ESG and related considerations in place?
Absolutely. So we administer the pension fund as a single pool of assets. So that's the contributions from our Ontario public servants as well as the nonprofit workers. It's all invested collectively, which again was one of the big benefits of launching OpTrust Select as part of an existing plan. That's that scale of that already existing pool of assets. And so we're a fully diversified investor. So we're investing in things like, real estate, infrastructure, private equity, and we're investing at a global scale as well. We're invested in, I believe it's a little over 50 countries around the world, which provides, certainly benefits in terms of the returns we're able to generate, but more importantly, it benefits in terms of the risk that we're able to mitigate. That's really how we think about investing, is all about not, how big of a return can we get? It's how can we avoid risk to our members so that we can provide predictable and secure retirements. And we think about ESG and climate change as one of those risks, and a big one. So because of the fact that we deal in really long-term time horizons, we've got members, who are joining the plan today at age 20, who might retire when they're 65 and live to be 100. That's 80 years where we're going to be working with that individual member. And so we need to be thinking 80 years into the future. And climate change is one of the biggest challenges that we are facing as a society, and it's a long-term challenge. So that's the way that we approach climate change and other ESG considerations, is how do we mitigate the risk that presents to our members over the long term? How do we ensure that our members aren't at risk in the energy transition, but also what is the opportunities to gain there? So absolutely, we invest with the ESG considerations at the first and foremost in our minds from a risk perspective. And for anybody that wants a much more in-depth perspective on our approach, because you could likely spend the next hour just covering our ESG strategy. We publish an annual report every year, which includes our responsible investing report. I mean, we see it as so important that we actually combine the two reports into one, because we wanted to make sure that as many members as possible were looking at it. And then we also have an outline on our website that articulates our responsible investing strategy and our climate change strategy, which includes a commitment to reaching net zero by 2050.
And we can share a link to that in the follow-up email. Maybe this is a quick answer. At what age can people access their pension?
So I'll take this one as well.
Yeah.
So we have a typical retirement age is 65, but members can retire as early as 55. But the benefit they receive is reduced based on the fact that they're going to be receiving it for a larger number of years. It's one of the kind of creative design features of the plan, is that we've really made the core benefit of the plan, the thing that most people are going to receive, as efficient as possible. So most people retire at 65, and subsequently we want that benefit to be as big as possible, as most efficient as possible. So there's not an ability to retire early without that reduction in the benefit you receive. So you can retire as early as 55, but your benefit is reduced subsequently.
Okay, Pam, over to you for this one. Has ONN launched the parental benefits top-up plan? Is this something groups can join now? If not, what's the timeline and associated costs?
Yeah, no, not yet. We started working on this, I want to say, Liz, like what, 2020, 2021, we had some seed funding to explore it. We worked with RSM to kind of even figure out if this is going to work as an idea. And then this was during the pandemic, and as you know, the economic landscape shifted quite a bit. So we took the last sort of 2 years to figure that out. Does the financial modeling now change based on what we had found, which at that time was essentially based on that financial model, anyone who joined the plan, employers would contribute 1% of their budget monthly as the payment. And then anybody who takes any sort of parental, sort of any leave would get a top up to a certain percentage. And I think we were looking at between 75 to 80%. And what also we had to sort of figure out is like the whole regulatory piece that Liz and Jason have been talking about. Is this an insurance product? Is it not an insurance product? Is it only for Ontario? Is it for Canada? Like all of those pieces. Do we do it? Do we offload it to someone? Do we build one ourselves? And essentially all the same questions that Liz had talked about when in considering the pension plan, we were reconsidering for this, because ultimately it would be great if it was sector owned, sector assets, and then we sort of invested the way that we want to. And so what sort of come out of that at the point we're at right now is sort of, we probably can't do it ourselves. It's not an insurance product. And we have to work with two pieces. One is someone who will manage the investments, and the second is someone who will actually do the administration portion of it. And does ONN do that? Does someone else do that? We RFP for both. That's the stage that we're at right now. We're just actually waiting for some funding to be able to do that work. So as soon as we get that funding, we can do that work. And then that'll sort of move us further along in being able to offer it.
So hopefully coming soon is the asterisk there. I think back to you, Jason. So are there any startup or ongoing fees for employers to consider beyond 3% of gross employee salaries?
So great question. Basically, no. The only additional cost is that, and the cost is specific to the employer, not to the members, is that employers contribute an additional 0.2% for the first 2 years after they join the plan. So employers contribute 3.2% for the first 2 years, and then it reverts back to 3% ongoing after that, whereas members are contributing 3% from the beginning.
And then does an organization need to be a nonprofit to participate, or can they be a social good business?
So the specific regulation states a nonprofit, charity, or broader public sector organization in Ontario. So registered as a nonprofit under the Provincial Act, or registered as a charity under the Federal Act. And then I know there's some organizations that are kind of in a gray area. It's the answer is really send me an email and I'll look directly at your organization and see if we can get the answer for you.
And we will, I know someone else asked in the chat as well, we will share contact information for Jason as well in the follow-up email, just so that you can have access to him. Okay, so the next question. As a unionized environment, how do we get the employer on board with providing employees and management a pension? Any ideas, suggestions, examples are most welcome.
Yeah, well, that's where we come in. So, I mean, we're actually a unionized environment ourselves. I think about a quarter of the nonprofit organizations that have joined thus far are actually unionized workplaces. So we don't only speak with employers or employees, we'll actually speak at the bargaining table as well and have done so in the past. So we're happy to speak to the employer about the benefits that it provides them. There's plenty of business benefits and business arguments for joining the plan. You know, we've covered some of them already in terms of attraction and retention and the efficiency it provides, as well as the fact that, you know, we are taking off quite a bit of administrative burden for an employer by administering the plan and handling any member questions on their behalf. So we're able to articulate that to the employer directly, be able to articulate that to the union as well, and help you support you in the bargaining process. And we can just come, you know, literally to that bargaining table and provide the information when you're going through it too. So we're happy to help in whatever sort of capacity makes sense.
There's a follow-up on why the extra 0.2% upfront.
Yep. So it goes back to the fact that we are a pension trust, and subsequently we, you know, perform as a fiduciary to our membership. So first and foremost, our obligation is to ensure that every member that we're serving, that we are putting their interests in front and center and operating the plan as efficiently as possible. So all of that is a prelude to saying it's designed to build up a reserve in the fund in case any new employer had a funding shortfall. So if anyone joined the plan, we're very, you know, considerate of who's joining, and making sure that there's not an undue risk being presented to our existing membership. But we want to make sure that we build up that reserve in case something happened to a new employer's funding.
Back to buyback percentages. Is the max only 3% for buyback, or is it 6% on the employee only?
It's a very astute question and exactly right. So you are paying basically the employee and employer contributions when you're buying past service. So you're effectively paying 6% for those past years, because the employer won't be contributing.
Okay. And do all employees have to live in Ontario?
All employees do not have to live in Ontario, no, but they have to be serving the province of Ontario. So again, this is another one where there's some gray area. So we have some members that live outside the province, but they are working for an organization that's headquartered in Ontario, and are being paid out of Ontario. And we have others where the work that they do is ultimately serving the province of Ontario. So again, if you have some sort of gray area in that on that question, send me an email and we can look specifically at your issue. Yeah.
Okay, I think we're at the last one. I think I've got most of the questions. Is there any effort, I think, Pam, this one's for you, but is there any effort to put together a similar sector-wide plan for health, dental, eye care benefits offered on top of OHIP that are commonly offered by private companies?
No, but I'm curious, like Liz, do you have a perspective on this? Because what happened at ONN is we had the pension stuff going, and then we have a group health and dental plan offering through Cowan Insurance for ONN members, which follows the same principles. But yep, I guess punting it to you, Liz. Any insights?
Yeah, I mean, I think I would only say that the Cowan program, it's a very efficient vehicle because of it's a group purchasing arrangement. So in the same way that organizations can get better deals by bulk buying, it's that kind of plan. So it's multi-organizational for the ONN network. But I don't think there's anything that is comparable to the pension plan on that side. Nothing that I've heard about. Anyway, yeah, but certainly worth looking into the Cowan plan that you can see on the ONN benefits page, I believe.
Yeah.
Member benefits, yes.
I think there was one more question, and I think this one is probably for Jason. Are national organizations based in Ontario okay? And I think you kind of said yes, but just confirming.
Yeah. So again, that can be some gray area there. So it's worth checking with me directly. But yeah, we do have some organizations that are sort of national in scope. But we can double check that for you based on your specific circumstances.
Cool. And then this last, I think, Liz, you sort of answered all the how did we come up with task forces, et cetera. But just the last part of this question, did we have any external consultant support around the task force? Anything? Yeah, did we have consultant help or anything?
We did the vast majority of the work in-house. We had one consultant that we engaged for, I think, one year when we needed to do some modeling. And so we hired someone who was actually, she had worked for the Ontario government on the Ontario Retirement Pension Plan. And I think we came across her because she was part of the, is it John Stapleton's shop, Open Policy, I believe. And so she had done some work with John Stapleton, and so we engaged her for a year or so to do some modeling when we needed some that kind of support. But other than that, everything was done in-house with staff and ONN network volunteers.
Awesome. Thank you. I know we didn't get to my third question, so I'll just kind of throw it quickly and let's see what we can do in 2 minutes. So for Liz, it was, 30-second, what would be your biggest advice if another province or nonprofit network or association wants to do something similar?
Well, obviously, I would say read the Ontario Nonprofit Network Pensions Task Force reports, which are available on the website, because there's so much more detail and granularity and history on how we did it at ONN. And so I think that's worth looking at, and certainly tap into the resources that you have here in the ONN network and Michelle Lisée and the Quebec Sector Pension Plan. Yeah, I would just say make sure that you do your homework in terms of convening and find out what are the priorities there. And talk to existing pension plans, because I looking back, I would say that was a very, very good option for ONN. But if you happen to have a rich benefactor that wants to provide the foundation for a new plan, then that's an option. But building on was certainly easier for ONN, so I would recommend looking into that option for sure. And good luck.
Amazing. And Jason, do you have numbers for us? Just, how is the plan doing? How many nonprofits, perhaps? How many employers or, individuals, workers, members?
The plan is doing great. So specific to OpTrust Select, we've welcomed 65 organizations into the plan. which represents about 5,000 members who, the vast majority, if not more than that, previously didn't have access to the security of a defined benefit pension, which is really what the impact of the plan is. I mean, I don't have to tell anyone on this call about the importance of the work that nonprofit workers do and that your sector does. And the recognition of the fact that you're doing this mission-driven work and often putting the people you serve ahead of yourselves. The impact of OpTrust Select and defined benefit plan is the ability to ensure that the workers who are doing this great work are also going to be looked after in their retirement years. I'll just finish with a quick story is that we've worked with a food bank in North York, and when the executive director was going through the process of joining, he highlighted to us that his primary reason, beyond the business advantages of, attraction and retention, was that he was worried that his team workers, his team members were going to spend their lives serving the community, and then when they reach retirement, end up being clientele of their organization, and saw this as a way to ensure that the staff would actually have the security and retirement that they deserved. So this is like sort of the true impact from our personal level, the impact that it has on people within the sector, and really why we value getting to work with the nonprofit organizations that we do serve. So thank you for that.
Amazing, amazing. What a wonderful note to end off on. Big thank you both to Liz and Jason. Thank you so much for jumping into this conversation with us, letting us ask, all the questions, veering off script a little bit. I think it was more than, more learning for us at ONN, and we are part of this plan, but also everybody who was online. And I really hope everyone who's online, you take the time to read all the stuff that we've been talking about, check out our website, reach out to Jason, reach out to us. We want to make sure we can facilitate access to this plan as much as possible. And yeah, thank you everyone for engaging. It was such a lovely conversation. It's awesome. All the questions, we were able to really dig into it. And we really hope that you found this useful. We will email you the recording of this as well as all the links that we've been talking about. So yeah, thank you so much, everyone, and have a lovely afternoon.
Thanks, everybody.